All right, let's welcome in our guest. We've got Dilip Bhatt, Joint Managing Director at Prabhudas Leeladhar, joining us from Mumbai. Mr. Bhatt, thank you so much for being with us on NDTV Profit. Today, the markets have finally broken their losing spree. But do you think this pullback will be durable? Because some people are saying so much shorts have already been cleared. A lot of people have already taken their profits, and this is a short covering rally when there aren't too many shorts in the system. What do you think?
Well, I think the way the markets have been very badly hammered and they were on a continuously losing streak, I think surely on a very short-term basis, market is in an oversold position. So some kind of bounce back is very much possible. That cannot be ruled out at all. The question then comes is whether this bounce back will be sustainable or whether this will be a sell on rise markets. And I think if one were to just piece some of the things together as to what has been happening, I think internationally too the emerging markets have been seeing an outflow, and India also is a part of that. So I think that is also making a very conspicuous impact on the markets in terms of the negativity. And over and above that, the confusion that has prevailed because of the demonetization. While we all are in agreement that it's a very phenomenal step taken by the Prime Minister, and it will prove to be very good for everyone in the long run, it is the intervening period that everybody is really challenged, and that definition of intervening period is still not very clear, whether it's going to be 1 quarter, 2 quarters or 3 quarters. My own sense is it will take about couple of quarters. So I think against that background, this markets possibly will remain under pressure as and when the bounce back happens. And in that sense, one has to be a little more cautious and careful.
Right. So do you think that the sentiment itself has taken a knock? You've spoken about global factors, but the markets are expected to bounce back, and even at slightly higher levels, selling is coming in. Again, we've not been able to cross the 8,000 level convincingly. Does this show that the trend is broken down? That caution means you need to step out and not go and buy, perhaps even look to lighten some of your positions?
Well, I think what you say is absolutely right. I think markets probably are still under pressure, and I think this it's a psychological factor also. The markets are trading below 8,000 in Nifty, and I think that itself should have a very pronounced impact in terms of people just trying to refrain from buying or making any fresh commitments in terms of in the markets. Also, I think as a very heated debate keeps on, which is going on at the moment about the possible impact, I think it's only compounding the matters further. So my own sense is that one should wait for a while, let the things clear out, and let's see after that, maybe a month or so, and then one can really take a very one can be a lot more clear in terms of what's happening in the economy and the repercussions on the market.
Right. Mr. Bhatt, the markets always seem to look ahead and discount what is going to happen in the future. Now, a bottom is not made in a day. It goes to lower levels, bounces back, revisits those levels. When this exercise is being done by the markets, where it's finding its feet, what do long-term investors do? What do you think from here on is going to work? Is it going to be the same consumption story that is seen, or some resources like metals that have really buzzed, or even some of the banks that have moved up well over the last few months? Or do you think from here on it will be a different story? Investors will have to look at different ideas.
Well, I think my own sense is that in the coming few months, as markets sink lower, or it has already sunk lower so far, and even if it comes down somewhat, I think the focus will once again be back on the frontline stocks. There was a lot of froth in the mid caps, and now in the change scenario of doing business, how much the mid caps will be impacted, I'm not telling they will be, but they may be impacted. And this way of doing business is also slightly changing. So some of those factors will weigh at least psychologically on the mid caps. So I think the strategy wise, it should still be on the front line and the known companies that one should focus on, as and when the market really starts, the way it has corrected, and possibly even if it remains around these levels. Not to say that there won't be bounce backs. So I think that is the first aspect. And as far as the long-term investor is concerned, I think the long-term investor should try to acquire at these levels. So what I would say is typically that if you're going to buy something worth say 100 rupees, then I think you should buy 10 rupees for next couple of months before taking a final plunge into the markets in terms of being fully invested. One should gradually buy and one should wait for the dips, or maybe then you just decide that okay, every 10th of the month you're going to buy something like a mini SIP.
All right. So investors can look at SIP kind of a concept for investing. But what? You said that blue chips would be better. And yes, they are now available at very attractive valuations, having come off from the highs. But what is going to work? We've seen auto stocks do very well. Home improvement companies do very well. Are these the themes that will be in demand going ahead as well? Or will it be something else? What are the ideas that they can look at, even if it just means a small investment or a staggered investment?
Well, I think something like pharma still should attract the attention. Something like infra should still attract the attention, because I think infra is one sector where we are all waiting that even in the revised scenario, as government is very well stocked up in terms of the resources, I think this will be one area where they will be focusing on to kickstart and to give the push to bring about a multiplier impact on the economy. So I think infra sector should be looked at very closely, and something like a pharma. I think pharma is also corrected in a very meaningful way. But these are some of the sectors which probably can hold on even in the revised scenario. So I think markets probably are just punishing them as well. So I think pharma is another sector, and then I would also selectively look at some of the banks and the NBFCs, but maybe after some time. But these are three sectors which certainly I think should be on the watch list.
All right, so let me start one by one. I wanted to understand, I'll come to infra in a while, but why are you picking or you looking at pharmaceutical stocks? We have seen the approval rates for at least some of the companies go up, but the overhang of the US FDA scrutiny is still there. Drug price action and, the investigation that was announced in the US, which led to a huge correction, all those overhangs are still there. How would you pick in the pharma space, and do you think all the bad news is already factored in?
So we think that a lot of bad news is already priced in. The fear of the change of government in US, and I think that is weighing a little less heavily on the pharma and not as much as on the IT. So I think pharma is still looking for some kind of a relief rally. But just taking some of your concerns about US FDA inspection, I think now that has been very well taken in stride by the industry, because prices have corrected based on that. And this is not to say that this is going to stop these kind of inspection. They will continue. But I think on a larger basis, we still feel that there is going to be a reasonable growth as more and more drugs come off the patent, giving the Indian companies a lot more opportunities. And I think the rupee depreciation also will weigh in favor of the pharma companies. So I think there are a lot of tailwinds going in favor of them, and that is why pharma looks on a risk-return basis, a limited risk, but I think gradually it can give a reasonably very good return.
All right. You spoke of infrastructure. Would you focus on those in the road sector, and how would you pick? Because a number of the infrastructure players still have a balance sheet that doesn't look very strong. They are still suffering from the delays they had in the past, And though the government has taken many remedial measures, changed the entire model of concessionaire, giving them, their arrears faster, how would you pick from the infrastructure space, and what are the companies that will stand out?
Well, I think in the infra space, definitely, I think we are not talking about the real estate. We are still talking about the roads, the ports, some of those things, which possibly where the orders are being given, are still being given, and that may get accelerated, and the execution of that will start reflecting in the results of the companies. You have a fair point over there that there are not too many companies in that sector where the balance sheets really can support taking of huge orders. So, so that makes the choice a lot more easier, in the sense that you have a Larsen & Toubro and maybe a couple of other companies who are really not so adversely impacted because of the past problems. So I think I would say something like a Nagarjuna Construction looks pretty good in that particular thing, or maybe something like Ashoka Buildcon. Some of these companies possibly can really take some of the major orders and and derive their sales and the bottom line. So I think that is how I look at this particular sector.
And you said you'll pick selectively among banks. Would you veer towards the PSU banks? They have been showing a little bit of an outperformance. Do you think they're good for more, or it's just going to be a seasonal or maybe a one-quarter impact where the treasury income may go up because of this increase in deposits? How would you pick in the banking space?
Sure, I think that is where the challenge is. So that's what I said, that banking is something which we will, in the pecking order, possibly it will come the third, because the immediate benefit is there for everyone to see, that how the PSU banks have been infused and are inundated with a good amount of deposits that we are seeing in the demonetization. So in that sense, it is good. Now, the challenge and the basic worry is that what will happen to the NPAs? Now, because of this, whether the NPAs, will they expand, whether more NPAs will come to haunt them? My fear is that yes, some more NPAs, which up till now were not on the radar, will start flashing on the radars, and possibly some of those things may take a turn for worse. So I think some of the NPAs will start coming back to haunt the banks, and that is where our worry is at the moment. But I think taking all these positives and negatives, I think I would still think that the PSU banks, particularly the likes of SBI, really would stand out, because I think they have taken a lot of, they are provided for a lot of NPAs. A few more NPAs may not really be all that overwhelming for them. So I think something like SBI, or maybe something like say Bank of Baroda also would look good. And I think in the private sector, I think one should still focus only on something like an HDFC Bank, or possibly even Yes Bank, and to some extent ICICI Bank.
All right, Mr. Bhatt, thank you so much for speaking with us at NDTV Profit, giving us your views on the markets and the stocks and the ideas that you like.